Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis, whether it might come from the economic calendar or a combination with that and headline news and geopolitical items. But also sometimes it gets a little confusing if the market sentiment changes and good news is now bad news because somebody might be looking at like scratching their head, what's going on here? Well, we try to get into that, give you the idea of what's on investors' minds and why the market's moving the way they're moving, and hopefully help you to make a informed decision for yourself, whether if you're looking to refinance or purchase. And speaking of such, a little bit about myself is I am a loan officer. I do work with a national lender. We lend in all 50 states. So I'd love to earn your business if you're looking to refinance or purchase, so please reach out. But more than that, we like to be a resource for you folks. So if you guys got questions about anything, please feel free to reach out. We'll love to be able get that information out to you guys. But in the meantime, we'll start off with the economic calendar today. We got a couple items here, and that we'll start off with the industrial production for the month of May. Now, April's data did get revised slightly higher, as you can see here, went from 1.1% to 1.4%. Forecast was calling for 0.4% for May, and it dipped in a little bit less than that at 0.2%. So very modest May. Now, last but not least, we got the leading leading indicators. This kind of gives us an idea of short-term economic activity, and it's not looking so good. Now, April was revised lower, went from negative zero point 0.3 to negative zero point 0.4. Forecast was supposed to be negative zero point 0.4, and it came in at negative zero point 0.4. So this is what's been kind of going on with the markets. Stocks were kind of going back and forth. Now they're kind of going in positive territory. Uh, Mortgage-backed securities were kind of going back and forth, and now they've been over the last hour or so. They've been kind of dipping further and further in negative territory for about the last hour. They've been what's on investors' minds? Well, after we had the Fed announcement on Wednesday, we've been seeing a lot of mixed data here on economic data, and basically showing that we could be slowing down. We've had a lot of negative in terms of manufacturing. We just see this. Uh, we saw jobless claims going up a little bit. With the rate hikes increasing and the slowing of the economy, that's basically look like we're going to go into recession. So the data are supporting a recession is being supported out there, and it looks like the odds of that happening are growing, and this is what's kind of worrying investors right now. Today, they are going up a little bit more as a result. I mean, stocks are going up a little bit. So what we're seeing is money coming out of the bond market going into the stock market. We've had a few days where both of them are doing well or both are doing bad. Today happens to be a day where people are buying kind of the dip, so to speak, heading into a long weekend here, as we'll have June 19th, Juneteenth on Monday. So there'll be a 3-day weekend. So next time we do these videos will be on Tuesday. But in regards to what's going on with the markets, this is kind of where the investors are at. They're not feeling too comfortable about where things are at. They still don't feel the Fed. They're being very hawkish, which is somewhat good news, but also maybe it's leading the economy into a point where we're going to a recession. So, and again, that may be a good thing as well. I guess time will tell. But regardless, let's take a look here at mortgage-backed securities. See what we're doing today. We ended up yesterday actually in being better shape. We were down for part of the day and then ended up closing up 5 basis points. But today, here's what I was talking about, where we went slightly up and we went down. We kind of worked our way back up. But over like the last hour or so, we've been kind of working our way down a little bit. So now we're down about 25 basis points from where we closed yesterday. And that's enough to have a little bit worse pricing from where we left off yesterday. So from where we closed yesterday, pricing is going to be a little bit off, a little bit worse than what we saw as a result. Now, treasuries did have, as you saw here, a pretty big drop here, which helped us out, adding a little less pressure. So right now we're down just under 3.24 for the day as 10-year yields are going there. And then last, let's go ahead and take a look at what's the average rate for conforming limit is across the U.S. here. And 30-year is now down to 6.05, and then a 15-year is at 5.38%. So these two have points built into them. Again, they're also kind of delayed on the day. If you guys would like a rate quote, please feel free to reach out. We're here to help you guys out. We'd be more than happy to accommodate and see what we can do for you guys. If you guys like these videos, please help us out. Smash that like button. We greatly appreciate you folks. And thank you very much for watching these videos. If you guys got any questions, again, we're here. Please shout out. Meanwhile, I will look forward to see you guys on Tuesday's video. Thanks again for watching. Have a great rest of your day. Enjoy your weekend. Bye-bye.